Okay, so hi guys, today we are going to cover how I find high and low of the day every morning on the Nasdaq, yeah. So basically, to identify the high and low of the day on Nasdaq, all you need is just three simple things, which is the first one is high time frame key level, of course, which is a high time frame liquidity pool, PD array, or any high time frame key, right? And then second thing you need is a key time. There are so many key times I think you guys know. If you guys don't know about key times, I can make a new video on all the key times. And then the third thing you need is just a SMT divergence, which I hope you guys know. So let's start it. Three things. Keep these three things in mind whenever you're trying to find the high and low of the day on NQ. If you look over here at the first example, this one, we had market dumped into a high time frame liquidity. Once we tap there, we expanded higher, forming what? The low of the day. And we have a continuation over here. Second example, we have tapped in a high time from PD array over here, expanded her, again, second expansion, expansion. First expansion, retrace, second expansion. Yeah, this would be the second example over here. The first one was off of high time from liquidity pool, and the second is from high time from PD array, same thing. And then same thing over here, we came lower, we tap a level, we expand her, expansion 1, retrace, expansion 2, protected, protected. This is the third example, but this is off of a Fibonacci level. There are so many Fibonacci's, right? So you can use any of them. As I said over here, it can be any high time frame key. By key I mean is a liquidity pool, a PD array or a level or anything. It could be any high time frame PD array you guys use. Okay. So pretty same examples over here, right? Off of all three different levels, we have same structure in the levels. But then if you look over here, it's a bit different. Because if you look, the second one over here is key time, right? The second option. Now over here, what you can notice is market open came lower inside the PD array, expanded her, and then at a key time, it reversed off of a high time from PD array. So why is it like this? We open low in a high time from PD array right here in the second example. We had expansion 1, retrace, expansion 2, retrace, expansion 2, and then we just continue higher over here. But in this, after the expansion 2, we have a key time open, which is 9 a.m. of course. 9 a.m. open, it tapped a different level of higher time from period and then it bang reversed lower, taking out this low, which you were thinking was low of the day, but it formed the high of the day over here. So we'll get back to this example after we cover this. Over here, same thing happened. We open in the high time from PD array, same like this. Expansion 1, retrace, expansion 2. Now look over here. We formed this high, right? We retrace back in this range. And then expansion 3. Off of what? The key time, 9 a.m. Over here, 9 a.m. Why do we have a continuation over here at 9 a.m. and why do we have a reversal over here at 9 a.m.? That should be your question over here. Now for that there can be two things, okay? The first thing you can notice is the high time frame bias, of course. So if your high time frame bias is bearish and you're looking for a low of the day, it's of course gonna fail, right? So we open low in the high time frame PD array in London, let's say, and you expand higher. 9 a.m. open up in a bearish high time frame PD array and then reversed from there, which is a true reversal, and this is of course a fake reversal. So as soon as we reverse from here, what's the target? The target becomes the fake low of the day. Why is it fake? Because the high time frame bias is bearish and you're looking for a low of the day to be formed, which is of course not going to work until its PM session. So this example should be clear. The second thing you can notice is time, of course. These two things can tell you if the half the day is fake, real, if you should trade continuation or reversal at what? 9 a.m. How can you use time? We had an open lower here in high time from PD array, but this is not at a key time. It can be like 1 a.m. random time, London, or it can be Asia 22, right? Get the point. So it's not at a key time. This low is not formed at a key time, but we still formed the low and we expanded her. 9M open in a PD array. This is just a fake high of the day for some time. Okay, what we're gonna do is 9M open, dumps lower, take out the fake low of the day. Why is it fake? It's not a key time. What do you need? Three things. You do need a key time. It's a very important factor in trading. So it's not a key time. 9M open, dumps, take out the low, which is not at a key time, fake low, and then it came lower. Okay, it came bro, what the fuck? Okay. It came lower. It tapped in hard time from PD array, and then it expand higher. Okay, let me just remove this real quick. Holy shit. Okay. So this over here, this line is a different high time from PD array. But look over here. We tap this high time from PD array over here at a key time. What is the key time? 9M open here, dumped until here it reached. It was probably like 9:45 or 10, which still comes in a very specific time window. So as soon as we tap there and we have a SMT divergence, we reverse from there, forming the real low of the day and expanded higher. This only happens when your bias is correct and the time is wrong. But if the time is wrong and the bias is correct, then you usually have a true reversal over here, right here. This would have been the high of the day. But since your bias is correct, it's bullish, time is wrong over here. You're gonna reverse, take out that low, tap in the PD array, expand higher. Pretty much it. I'll show you guys one example before I end this. It could have been like, I'll just do, think over here, yeah, Tuesday 10:30. No, this is not clean. Let's just do the recent day, which is what, Friday, okay. Of course, we're gonna start from the 1 hour because we do need a high time from level. Okay, look at this. We have the open over here. This is the open, 1800. We open in nothing and we expanded her. Correct? Over here, what do we hit? We hit this 1 hour OB or breaker, anything, call it. Okay, we hit this. Let's go on the 15. Maybe we have our levels. So we have this 1800 over here, and we have this high time from PD array over here. We reversed from the high time from PD array at 4 a.m., which is a key time, yes, but my high time frame is bullish. Okay, first things first, I'm bullish. Now I'm bullish. What I'm looking for? Am I looking for a high of the day? Of course not. I'm looking for a low of the day. When is the low of the day formed? Until price was here. It was formed over here at 1800. Now this open low was in nothing. This was in nothing, and we just had expansion high. There was of course no SMTs over here. It was not a key time. It was not tapping a high time from key level. So all three things were missing over here, which tells me of course this is not a real low of the day. We expand higher, we hit a level, we form a projected high for a moment, and then we came lower. We came lower at the very specific key time, which is 6:30. It's a very specific key time. Study that. 6:30. 6:30. What we did? We took out the 1800 low, right? We formed the SMT with the 1800 low. We're here. If you look, and Q took it. YM didn't. Oh, ES didn't took it. That's SMT. So we have that SMT divergence. What's the one thing missing? High time from level. Okay, you go on the hourly. You have this big ass large order block. Bang. Now, this order block was not formed until we closed above it. When did we close above it? At 1800. So before 1800, this wasn't really an order block, but it got formed after Asia session. Now you're gonna say, okay, price tapped here. Why don't we trust this as low of the day? Why this? Because this swept the fake low of the day. It was a key time. It had SMT and it was in a high time from level. This doesn't have all that. So you can trust that low of the day. After all of that, we expand her. 9:30 open over here. What it did? Expansion 1, retrace back in this order block. you could have long from there if you trade 9 a.m. like me. The stop goes below this, and your target just goes at this high, which is the fake high of the day, giving you 100 points. And yeah, pretty much it. We had expansion 1, retrace, expansion 2. If you want to be more and more like precise, what you could have done is not take any trades over here. What you could have do is mark out this range OTE. You wait for price to come back in the OTE. What do you have over here? You have this 15-minute OB, right? The 15-minute OB aligned with the OTE. You go on the 1 minute. Now you know that low of the day is in, of course. This reversal was off of a fake high time from PDRA. We are not bearish, so it's gonna get taken soon. That's our narrative. We came back lower, OTE, clearing out all the traders who were in long from 9 a.m. over here, 9:30, 9 a.m. or 8 a.m. We cleared out all the traders. We tap in the OTE PDRA. You could have long from there. Stop goes below this low. TP goes at the fake high of the day. And just with that, you could have caught 195 points. Very simple yet effective if you know the direction for the day, right? So if you know the direction for the day, it's bullish. You have identified the low of the day. You have step 1 done, bullish. Step 2 done, identified low of the day. The only thing step 3 is entry. You got the point. And then if you identify the first and 2 step, and you trade 9 a.m., the third step becomes very easy. And yeah, pretty much it. If you guys have any questions, you can ask them in the comments. I'm gonna drop my free Discord link in the description, so if you wanna join that, you can join that. See you guys, take care and peace.